Ford Motor is a well-run automotive company, and you could really see that their management team is doing a great job over the last 3 years. Here's a couple pieces of information. First, we had a massive pandemic, and that pandemic really disrupted the whole world. And Ford just kept operating, and they're really profitable this year. Second, they had big supply chain issues, and again, they worked through those supply chain issues and kept the business going. And now they have big union strike. So I'm sure they're going to deal with this well. I think they're negotiating in good faith, and hopefully both sides come out of it with what they need out of that negotiation. I'm an investor in Ford, and I invest because I think they offer a really good proposition for me. I'm a value investor, and I like discounts on stocks, and I believe that Ford stock offers a good discount. Second, they offer a really good dividend, almost 5% dividend, which I really like. I have a process to invest in companies. I like to share that with you. And I like to share my analysis on Ford as well. My name is Victor. I have an MBA, a lot of business experience, and I like analyzing companies and sharing that analysis on YouTube. If you can do me a big favor and like my video and also subscribe to my channel, I'd appreciate that. Now let me share my process and my analysis on Ford. My mentality in investing in a stock is like buying a business. You're buying a fraction of that business. So I really want to know that I want to be in that particular type of business, and I want to be an owner in that particular company. That's the first question I ask myself. Second, I want to hire people that are going to really operate the business very well. And that's really a grade on the management team. Are they operating the company well? I don't want to buy a business that comes with a bunch of debts, a bunch of problems. That would just be a bad decision. So I want the balance sheet of this business to have very little debt, less than 3 times EBITDA. And I want a discounted stock. I wouldn't buy a business if, let's say, I was paying twice what it's worth. No, I actually want the opposite. I want a nice discount so I can buy that business, own it for a while, and see my investment go up in value. And based on the answers to those 4 questions, I decide whether I'm going to buy, hold, or sell a particular stock. Ford is over 100-year-old company, and it's natural to compare Ford to Tesla because Tesla is a really exciting company that is, I'm going to guesstimate, 20 years old and really revolutionizing the automotive industry. I think Tesla is a really good thing for the automotive industry because it forced all the competitors to get better or die off. And as I look at my Ford investment versus Tesla, I really like the Ford investment. I used to be a Tesla stockholder, by the way, and I sold off at a gain. But I believe that Tesla is so darn popular that the valuation of Tesla is much too high. It's probably trading, I don't know, at 2 times what it's worth. And that's just not a good proposition for me. As opposed to Ford, it trades on a PE that's about 6 versus Tesla that trades on a PE that's way up there around 50. So I just think that for a value investor like myself, I'd rather buy a Ford. It has older business, which is good, more diversified business. They're in a variety of vehicles, from passenger vehicles. They're the leader in pickup trucks. They have a commercial business. They have a lot of mature markets across the United States and really around the world. So I'm really betting my hard-earned money on Ford. It might be a more conservative decision, but I think it's going to be a wise one because it's going to return better returns for me over time. And it's going to pay me that dividend as well. And Tesla does not pay a dividend. The automotive industry has to adjust to provide electric cars. You have a legacy company like Ford. Again, they've been around for over 100 years. So they build gasoline cars, diesel vehicles, and they've been doing that for a long time. But now they have to get into electric cars. And at the very beginning here, as they launch their businesses, they're losing money, and that's acceptable. For the first couple of years, you name the business, first couple of years, usually a business has to invest and they take losses. And as they get better at building these electric cars and they get the volumes up, this should get better. If it doesn't, they're going to have a big problem. If it does get better and they start selling volumes, they have a really good business on their hands. So I'm really going to watch this closely. Further comments on electric cars for Ford. I really like their F-150 product. The F-150 pickup from Ford looks great. I think it has a huge addressable market. I think it's being accepted by the market really well. And I think that's really working for Ford. The Mach-E is an okay vehicle. I don't think it looks all that cool, but maybe other people think it does look cool. But I think that vehicle is beginning to show signs of lack of demand for the Mach-E. And I think Ford should create more vehicle options on the electric car lineup that I think consumers can pick from, so that they can buy a Ford and they can buy an electric Ford if they choose an electric option versus gasoline. What's right in front of us here is this union strike, and Ford needs to deal with it. I think they're negotiating good faith from what I observed. Now, I'm not watching this super closely, and I'm not a union expert or a labor expert, but I could just say that I hope both sides get what they need. I think this business is one of the businesses that really built America, so to speak. I mean, the automotive industry has been a real important industry for this country for a long time. And I'm hopeful that, both sides see that, hey, they're in it together and they negotiate in good faith. I'd love to see production stay in the United States to create jobs for as many employees as possible. And I'd like to see our companies thrive in the United States. Tesla's really made everybody aware. Hey, they created a company here in the US. They build cars in the US. They sell them here in the US. And I think there's a lot of lessons to be learned from Tesla. And I hope that both sides of this negotiation look over at the competition, look over at the foreign competition, and really work together to form an agreement that's going to make them competitive. Now, over the last couple of years, you've had supply chain issues, and that's a problem that actually created a good situation for Ford, because what historically has happened in the car business is when car manufacturers overproduce cars, they would start discounting and offering all these incentives and rebates, and it really squeezed their margins. So although their revenues were going up, they really weren't very profitable. So the last couple of years have actually been years where the scarcity has enabled Ford to really have discipline, and you can see it in their numbers. Not only did their revenue go up, their profit just went off the charts. So that's great to see in the time they were able to buy back shares. So that scarcity is a good thing. As we deal with this union strike, again, the car manufacturers are not going to have surplus and therefore discounts on cars. Forget about it. I think new cars, they're still in high demand, and they'll continue to have really high sticker prices. And the car manufacturers, as well as the dealers, will still get a good price for cars if you want to buy a new car on the lot. Ford's balance sheet's in really good shape. They have a lot of cash on the balance sheet. Not only that, if you just look at their debt and their EBITDA, they're less than 3, meaning that they could pay off all their debt if they had their EBITDA at regular levels. In about 2 years, they can pay off all their debt if they wanted to. With the supply chain issues and Ford really commanding higher prices, they really drove up their free cash flow. In fact, their free cash flow increased more than $4 billion when you compare the most current quarter closed versus the year before. I mean, it's just a really, really good jump in free cash flow. I believe that Ford is discounted by 53%. And what that means is that I believe each share really is valued at $19.27 per share, but the stock market's trading the stock at $12.61. So it offers up a really attractive discount of 53%. If you compared this to Tesla, and I do have videos on Tesla, and you can compare against that. Tesla really is being sold at a premium. So I think it's risky to buy Tesla versus Ford. Ford offers a nice, comfortable discount, and they pay that really nice dividend as well. Their earnings per share is really solid at $1.82 is expected for this year. And with a just normalized PE of 12%, since they are growing, I'm using a factor of 12%. I value the company using the earnings per share method at $17.64. I value the company based on their free cash flows, and I'm using their guidance to as a starting point for free cash flows of $20 per share. So again, really, I believe a value investors type of investment is the Ford stock. So let me evaluate Ford and see if I want to buy, hold, or sell. Do I want to be a part owner in this business? Do I like this industry? And the answer is yes. I think the automotive industry is an industry that pays dividends. In the case of Ford, it offers a really good value proposition, and it is a business that I can understand. And I believe I'm buying one of the best run companies, automotive companies in the world. I think Ford's proven that over decades of really good performance. The management team, very good management team. I think their CEO is excellent. Debt's under control, really nice discount offered on the stock. So I'm going to continue to buy shares of Ford. Looking at where the stock has traded over the last 5 years, it really rose in the very beginning of 2022. I have a value of the stock at $19.27. The reason I value companies is so I could see if there's a discount available or if it's being sold at a premium. And at, in the early 2022, it was being sold at a premium. But right now it's being sold at a discount. So it's a good investment that I foresee. You look at year to date, it's up about 8%. Not bad, especially since you can add that dividend at 4.76%. So combined, that's almost keeping up with the S&P. And I think there's some upward potential in the stock price, especially as we move into the quarter end and they report their earnings. I think their earnings are going to be really good for Q3. So Ford stocks are a really good, stable stock for me. I feel really comfortable with my investment. It is a sizable position that I have in Ford, and that's because I feel like it's a very good discount on the price. And that dividend, almost 5% dividend, is a really attractive proposition for me. And again, as I compare Ford to Tesla, Tesla's, a fun company to watch and a really exciting company. But you know what? I could read up on Tesla all I want, and that's free. I don't have to buy their stock and see it go down in value. I know the Tesla stock really, really crashed last year, and I know it's recovered this year, but boy, I think it's going to crash again. I think Ford, it really has one direction to go, and that's going to be up. It's at a really nice low stock price, at a really nice low PE, and I think the only direction that it's probably going to go is going to be up. So thank you for watching the Ford video. I hope you found it interesting. I'd love to hear comments from you on what you think about Ford or any other automotive company. Do me a favor and like my video and subscribe to my channel. Good luck investing in 2023.